You're watching Newsfeed AM. Let's pick up on the markets now. The local bourse is facing generally higher global markets today, with Tencent trading higher despite the rising number of COVID-19 cases and protests as a result of the lockdowns in mainland China. Carmen Mpelwane is portfolio manager at Absa Asset Management and joining us now to give us a quick sense of how the JSE is performing in early trade. Carmen, a very good morning to you. Your overview of how the markets have opened this morning after closing marginally firmer on Monday.
So we're definitely seeing the JSE opening up stronger this morning, likely off the back of the strong performance in the East, which is probably boosted by the fact that there's been a pullback in terms of the protests against the restrictions in China. We've also gotten some comments from some Fed leadership last night, and what it did say was that we are likely to see higher interest rates for longer. But despite that rhetoric, we seem to be opening up a lot stronger in the green this morning.
Well, the quarterly labour force survey for the third quarter expected out from Stats SA this morning. There seems to be consensus that the number has ticked up somewhat. Is that your expectation as well?
It's probably going to be in that direction. I think you've got to remember the comparative would have, in terms of last year, would have encapsulated the unrest. So there would have been probably a downtick in that time, and restrictions were a bit different as well. So that's definitely going to give a boost into this quarterly number release. But that doesn't overcome the situation where we know that the unemployment rate remains quite high, specifically with the youth. So as much as we are expecting an uptick, I think it is so marginal that it doesn't go a long ways to actually alleviate the significant issue that we have in South Africa. And so it's important to also categorize between whether the uptick is between permanent jobs or whether it's contract jobs or part-time jobs. So that's going to be key as well.
Very, very important numbers to look out for later this morning. Let's then quickly turn our attention to company news. Tharisa posting its trading statement for the year, which ended on the 30th of September 2022. Talk us through their numbers.
So we know these numbers will include the acquisition of Carol Mining, the controlling interest that Tharisa has acquired, and that has given the boost to earnings per share, which is guided to be up between 41 to 44%. On the headline earnings per share basis, we're looking for an increase between 7 to 9%, keeping in mind that this would have encapsulated the significant strength in the PGM basket, but that was earlier in the year. It has come down significantly, and that was cautioned in the production numbers in October. Having said that, the market seems to like this trading statement, and the stock is up this morning at the open.
Let's conclude the conversation with Vugile Property Fund, which has also published its interim results. How are their numbers looking?
Again, it seems to be very strong numbers from Vukile. Probably one of the stronger performing in terms of the share price on the JSE year to date. The focus there is on shopping malls, both in South Africa and Spain, and they've managed to probably do a significant turnaround, as we've seen across the property sector since the pandemic. So vacancies down to 2.3% in South Africa and lower than that in Europe. Add to that rental reversions have been very positive in South Africa. So all in all, a good formula for a property company. And again, as I've mentioned, we've seen a significant boost for the share price year to date.
Carmen Mpelwane, let me thank you very much for your time and indeed the markets update. She is portfolio manager at Absa Asset Management.